Hi everyone. Today's Monday, December the 23rd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. As you know, on Mondays, we begin with a weekly framework so that we can see what's been happening over time and where our target measures are. So as we start with the ES, what we notice is, first of all, our measured motion from resistance to support to resistance, breakout to, and let's collapse that, breakout to the 2x of this range, and then a pull back into the halfway spot. So we know we've got this range pretty well defined. We break out again, goes all the way to the top, pulls back a little bit, and this is a tightening formation. This is a Keltner channel, and so we're looking at it in terms of broad motion. So last week, when we broke the 60-41, it triggered some shorting action for us, and it pulled right back into frontline support at 59.72, and now it's trying to hold that zone. My suspicion is that if we break that level, 59.78, 59.70-ish, that we've got further retracing into the bottom of this box at 57.06. Now, a lot of folks believe that because the debt ceiling issue got fixed, that all of a sudden we're off to 6,300. Not so fast. I say, yes, it is by the dip. So if it comes down into the bottom of the box or retests last week's low at 58.40-ish, we are going to see buyers try to step in again. But we have ourselves a little bit of a break. We're underneath the hull. We seem to be a little bit underneath that VWAP, and so that is a concern. So big picture, that's what we're looking at. If it breaks to the north, what can we look for? And so we need to do a Fibonacci, and we've got to take the last wave that made itself a good high, and whoopsie, she does it in the opposite direction, and a good low. Let me fix this Fibonacci. Let's do the reverse. And what we can see is that number right around 6,300 that everyone is calling for. So our eyeballs need to be there on the upside if that should happen with the break above 6,100. That's what we'd be staring down. Otherwise, 5708 looks like the number that we'll see in the ES. And those are the ranges. I would say these are the numbers that you have to put alerts on. Let's go check out the weeklies on the NQ. Now, here's what we're staring down. It's broken out of this third range and coming up to the top. So tech actually looks pretty bullish, if you ask me, provided that it holds this support zone right here. And you'll notice, and that support zone is 21,204, you'll notice that we wicked below it last week, but immediately began to recover. So if it comes down into the 21,200, step aside and see if it dips back at that 21,000 even, and we've got ourselves another bounce zone. If per happenstance it fades below there, which seems unlikely based on the overall motion here, it looks like this area, old resistance, messy support around 20,600, 20,500, somewhere around there. That's what we are looking at for downside pressure. Upside pressure, let's build a Fibonacci, right? We've built a Fibonacci on this wave here. We can see that 1.618 is 23,228 and 22,800 is 150. Our box is just jammed right in the middle of that. Looks like about 23,000, right? So that's what we'll be looking for. Right now, we are at the battle zone at 21,600, and then we'll really need to get above 21,800 for us to say, hey, we've got some upside action waiting. That's going to be what it looks like here. If we cannot get up over 21,800, my estimation is that we'll have an inside week inside of this zone at around 21,012. Everyone's calling for this being the week of the Santa Claus rally. We can see clearly we have a buy the dip formation. There will be buyers below, but it could be a little sloppy, right? And again, there is this number here at this topping formation that looks like 21,260-ish that we might actually see. But these are the numbers to look at for major participation in the charts. Taking a look at the YM. YM looks really fairly different to all of the others. It has broken out of its 2x range. It has not gotten to the top of the 3x and is now testing this zone. In my mind, the short, if you're getting aggressive, last week's open with the failure to breach the opening of that prior week, which was a down week around 44,890, that triggered the short. The more conservative short is the break under 44,550. And again, a continuation of that short below 44,250. Let me remove this line so it's not so sloppy. Right now, we're dancing at the edge of the close of last week into the middle of, well, it's not quite the middle of the Keltner channel, but it is this exponential moving average that I have here, which is also a very solid support zone, 21,119. If we happen to bounce off of this edge at 43,243 and hold the pre-market low, we'll walk back up into 44,500, 45,000, and then 46,250 might very well be on the horizon. Okay? But I suspect things might be a wee bit choppy here, particularly as momentum is drifting down a little bit. All right? So those are the lines that we should look for. Let's take a look at oil. Oil has been incredibly sideways. Look at this on a weekly chart. You buy the dip around 66, you sell the spike at around 71.50, and then the rest of it, good luck, because it's going to be a sideways slop event. All right, what's the trend? Clearly down. We've got ourselves some sideways motion. Could we break to the south? Yes. Do I think that that's likely? Well, yeah, actually, I do. I still think bounces are sell zones, and the trend line, could we say it's shifted a little steeper? We could, if we extend that motion, right? So we could say it's doing that a bit, but there are a lot of people trying to defend this line at around 66 and some change, all right? If it breaks, it could break really hard. Liquidity areas, 55, 50, and then 42, okay? And then lastly, if we look at gold, gold is in a very interesting spot. Here's why. We've got an upward draft where this is the resistance line. It becomes support, and now they're testing it again. You know, my thought was 26.24 needs to hold as a support zone, or it's going to break down. So it's triggered shorts for the last couple of weeks on the bounces higher. Now, this morning, it is showing short action from that 2640-ish area with buyers sitting at around 2560, 2570. Let's put it right around here, right? So bounces are still sell zones. Big picture shows upward trend, but the steepness of momentum to the south tells me that we've got ourselves some more downside action waiting here. The dollar, which I'm very grateful for being in Switzerland right now, the dollar has been rising pretty sharply of late, and it may continue. I've seen it much higher, but as you know, it's not really a great place that it's sitting in right now, and the higher it goes, the cheaper gold and oil and essentially all metals and commodities are going to get. All right, that is the updraft of everything else. Notice from our regular formations. Wait, did I do SPY? I did not. All right, sorry folks. I know, I'm so sorry. All right, as we do SPY, here we are. The breakdown occurred last week at the loss of 600. I mentioned that. The target, first target was 590. Second target, 584, old resistance, new support. It broke that and then recovered. Now, the support edge to hold is 584. If we lose 584 this week, to me, 574 is next, and then 564 after that. Okay, so what is the storyboard? If we draw the last big wave, we can see the break higher is showing at 617, and then, you know, probably 625 if I were a betting man, because we do see that it's moving in those 5 lots, as it were, up the chain. Okay, but clearly by the dip, but we've got ourselves downward pressure. If we lose the close of last week below 590 after the first 30 minutes of the day, watch for it to head below and watch for buyers to hold before you jump in for a long. Otherwise, it'll be short action into the next lines of support. For the Qs, the failure to hold the close of the prior week triggers weakness. The short actually engages at the break of the low of that prior week, which said that below 525, 527-ish, there was shorting action. Next line in the sand was 513, and then below that, looks like about 506. Never got to 506, but we can see as soon as it got there into that 510-ish, 509-ish region, it began to bounce because dip buyers are still sitting in there. And since they've thought this debt ceiling is going to change everything and it's going up, 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 that's what folks think Santa Claus rally is going to do. A lot of buying pressure showed up on, what day was it, Friday? After the FOMC meeting. So upside pressure looks, if it happens this week, upside pressure gets to 543 and then 552. Okay, folks, that's it. Remember, you're going to look at the charts the same way you look at them on that monthly. You're going to look at them, on the weekly. You're going to look at them on the 1 hour. Okay, you're going to look at trend, then you're going to look at momentum, then you're going to look at relative support. We're sitting here at the base of value area low. Buyers came in around that area, right? Of course, the time looks weird because I am 6 hours ahead, right? And so this is what you're looking for. Prior lows, hold the bounce. The chart is trying to hold a fair bit of volume. Came in over here. But I got to tell you, this is what's making everybody very bullish. All of this massive buying right here relative to the price action here. And the market breadth, I mean, it turned on a dime, absolutely rotating over where many more new highs and very, very much fewer new lows and broad participation across. So it moved from very thin volume, weak market breadth to one afternoon of incredible volume and a shift of market breadth. This is why everyone is thinking that dip buying is going to continue, and this is the middle of the Santa Claus rally, or the beginning of the Santa Claus rally. All right, everyone. Take care. Of course, I won't see you on Christmas Day, but I will be doing a midweek update, probably the day after Christmas. Hard to say. All right. Okay. Take care, everyone. and I'll see you soon.